This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for tuning in and for the continued support. If you like what you hear on the Planet MicroCap podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks to discover the show and join in on the microcap investing community. Our next conference, Planet MicroCap Las Vegas 2026, is happening June 16th through 18th, 2026 at the Bellagio Resort and Casino. This is the premier event for microcap investors, issuers, and industry professionals, and you're not going to want to miss it. Visit planetmicrocapshowcase.com for updates and to reserve your spot. See you in Vegas. Now, my guest on the show today is Gwen Hofmeyr, founder and senior analyst at Maiden Financial. In this episode, Gwen walks us through her unique research methodology, which she refers to as financial archaeology. This is a process built around extremely deep, original investigative work designed to uncover uncommon information, insights that simply aren't available in typical company reports or mainstream research. We discuss how Gwen routinely spends 200 to 600 hours analyzing a single company, validating market share by breaking down thousands of individual products, and constructing an understanding of a business that is entirely independent of management narrative and sell-side opinion. We also talk about how this approach leads to owner-level conviction and why that conviction matters so much in the microcap universe where volatility is high and broad consensus is often absent. Gwen also shares why some of the most compelling opportunities she finds today are in Europe, particularly in industrial and lagging edge technology companies, and how AI is actually increasing the value of deep human research, not replacing it. So thank you again for tuning in to the Planet MicroCap podcast, and please enjoy my conversation with Gwen Hofmeyr. Gwen, thank you for joining me today. How are you doing?
Thank you for having me. It's another sunny day in Toronto, so I can't complain.
Absolutely. No, it's great to have you. I mean, look, I reached out because for 2 reasons. One, you'd register for our event, and I'm like, all right, what's going on? Maiden Financial and a research thing. What's going on? And then, of course, I do a quick Google, and you see you're on one of my favorite shows, Value After Hours. I'm like, oh well, we got to have Gwen on here, and so I appreciate you taking the time to share your thoughts and insights on here.
Of course.
Very cool. So. My first question that I ask everybody on here, I'd love to get your background, what got you started on your investing journey, and then maybe also catch us up to then the founding of Maiden Financial.
Okay, that's a long story. I'll try to keep it brief. So I guess we would have to go back to 2017. I was in my final year of political science. So I'm a political scientist by training. And I was just in a state of despair. I didn't want to be a policy analyst. I didn't want to be a lawyer. And I certainly didn't want to work for the government. So I was kind of in this existential period of my life where I kind of needed a change. And one of, I guess, the industries that have always stood out to me, just my great-grandfather, F.H. Deakin, had a board on the Toronto Stock Exchange at one point. There's a lot of kind of family history in Canadian markets with my family. So I went down to my local used bookstore, picked up one up on Wall Street, and those first pages, it felt like waking up for the first time. So in that first year, gosh, I read 36 books, probably some of them 5-6 times over, started a blog, wrote a book called The Half-Wit Crustacean on all the mistakes that I made during my first year investing.
Keep going. I'm like enthralled.
Okay.
I'm just like, sorry, I was on mute. So I'm just like, you see me like just mouthing like, wow. So sorry.
Yeah. So I wrote a book. I took very seriously Charlie Munger's advice for investors to rub their nose in their mistakes. And so I thought, what better way to improve than to showcase my mistakes to the entire world. So I wrote a book, pretty embarrassing stuff, but I had fun writing it. And then shortly after that, I got scouted by a company called Tiny. So Andrew Wilkinson, one of the founders of the company, reached out and asked me to meet for coffee, and then I was hired the following week. And then I worked for him between Tiny and his family office for about 6 years. And then last year, March, I've had a bit of a desire to go out on my own, which coincided with a convenient laying off on behalf of a divorce that Andrew was going through at the time. So all of a sudden, I was on my own, and I guess I just wasn't quite sure at that point if I was going to start Maiden or if I was going to work for another firm. And so I interviewed with managers, small firms, large firms, for about 8 months, and I would apply with my research. And every single time I would get a response that would be along the lines of, we are not going to commission the depth of your research, or we don't know how we're going to fit you in to our model. So with all that said, I had published a couple reports during the year, and it seemed like the market response was very favorable. And just generally speaking, I think the fact that we exist in a world that is dominated by passive and quantitative investing strategies, I think the advent of AI is another factor to consider. There's a real lack of in-depth research on the sell side. And from the perspective of an investor who likes to think like an owner, I wasn't really getting the information necessary to achieve that kind of title for myself, where I could call myself an owner of a particular company. There was a lack of owner-like understanding conveyed in the reporting. And so I took that and decided to run with it. And here I am about a year later. The business is doing very well, and I moved to Toronto to take it to the next step. So
Awesome. Thank you for your full background there. And wow, what an amazing story. I mean, it's interesting when you bring up AI, not to like hit on that, but it's been coming up a lot recently, even just on, individual investor write up side of things where, it's so easy nowadays where you can put all the main things in ChatGPT or whatever.
yeah,
I'm not unguilty. What's the word? Not guilty. That I'm guilty of using it. I don't know, whatever. Not
yeah,
necessarily on those write-ups, but even in preparation for certain things,
right,
and you know, even on those, you see in some of the write-ups where it's just so easy to, put together, a nice glossy research report. But it's
right,
it's now starting to become so painfully obvious that it's like, oh, this was clearly made with AI or ChatGPT or
yeah,
whatever. So you're right. Like there is this need for these really in-depth, high-quality deep dives into companies where, as you said, you don't always get that owner-operator perspective that really comes with, having that human element, human touch.
hmm
You
yeah.
know?
And I think that AI as well, in its current iteration, it doesn't have the capacity to be original. And so in a world where there's less original work being produced, potentially or presently and prospectively, I think it's never been a better time to roll up your sleeves and to do work that people are generally unwilling to do or don't want to do or are just not commissioned to do. So most large firms are not going to commission an analyst to just focus on one company for 2 months straight,
Mm-hmm.
analyze thousands of products to really understand what a company is, what it does, and its competitive position. It's just not something that is commonly known. And generally speaking, to acquire that, it means going beyond the reporting. And
Uh,
most sales firms don't go beyond the reporting.
should we go full existential and just hope that that never happens with AI being able to create fully original works? Can we hope and pray?
Yeah, I don't know. I don't know because I think that you would have to know what questions to answer it, and I don't know how I would know what questions to ask it without understanding the unit level data. Because
Right.
frequently in the analyses that I'm conducting, they involve the analysis of thousands of products,
Hmm.
both at the company level and at the competitor level. And I think that there's always about 10% or so of products or services um, that are atypical in the way that they're constructed or presented that I'm not sure AI would necessarily pick up. unless you are aware of that nuance. And I think as well, I think it's just, I guess you just have to know, like there are lots of companies where I think analog sensors, for example, um, there are over 2 dozen different types of analog sensors that sense different environmental phenomena. That's not typically conveyed on a unit level basis in reporting. And so it'd be difficult to understand how an investor would know to answer the more granular, important questions related to the competitiveness of a company because they're
100%.
frequently misconstrued.
Oh, we're about to dive into that in spades. I have a feeling right now. So, one of the other reasons I wanted to invite you on here, I really wanted to dig deeper into your investing philosophy that you clearly have done a lot, put a lot of thought and effort and time into putting into different frameworks. For instance, I think in your work, you described your investing philosophy as doing financial archaeology. Absolutely brilliant. I'm super jealous. Like that is just so good. So for you, like what does that mean in practice, and how would you say it differs from the conventional fundamental research?
Yeah, I think, I mean, if you want to produce a differentiated outcome, you have to produce differentiated work. And the foundation of differentiated work is differentiated behavior. So if you conduct an analysis that is unlikely to be replicated, so if you develop a process that's very difficult and time consuming, at least in my experience, it's more likely that you're going to produce a body of work that is unique, at least to some degree, from the general consensus. I like to say that if you find friends easily with the information you have, then the information that you have is common. And producing differentiated work is about acquiring uncommon information. So when I approach the analysis of a company, I approach it the way that an archaeologist would approach an undug dig site for the first time. So no one has ever dug that particular archaeological site. They have no one to call with insight on for someone who has experience excavating the site, they have to rely on their experience, their expertise, and the lessons bestowed from great practitioners. So when I begin analysis, I usually have an overarching hypothesis and a method in which I test that hypothesis. So I kind of chart out a dig site, and that usually involves getting every single company in an industry and a data set, looking at 10, 5, 3 LTM kind of economics, 10, 5, 3-year average economics, and comparing the shifts over time. So what companies have become more profitable, what companies have become less profitable, what companies are more levered, less levered, what is the ownership structure like, and trying to just uncover questions that require answers. And it's just kind of a sort of incremental coming up with questions, answering the questions, down the rabbit hole you go. So excavating the site brushstroke by brushstroke until it's completely uncovered, so that you acquire the understanding for yourself. Self-sufficiency, I feel like, is a very important attribute for an investor to acquire. And I tend to be biased towards owner-operators, which is pretty typical of value investors and quality-oriented investors. That's particularly acute in financials. Economics tend to kind of correlate, at least super normal economics tend to correlate with owner-operator structures. So yeah, that's what I do. And it's usually an analysis, I would say, takes anywhere from 200 to 600 hours, depending on kind of the breadth and depth of the work involved.
Absolutely. So what does the investable universe look like? What's some of your key criteria that, is the base, and then you dig deeper from that?
Well, I would say that in terms of size, we do have a minimum market cap of 200 million free float. But personally, 20 million, probably my minimum. Any nation where there's a strong rule of law is another criteria. So adding that geopolitical, or sorry, that political risk kind of just adds complexity that doesn't need to be there.
I think every mining company is hearing what you're saying. It's like, oh, okay, fine, I got you. Sorry.
Yeah, yeah, it's unfortunate, but I mean, I'm more in the small cap space and mid cap space, just given my clientele and Maiden subscribers and the assets that they're working with. Maybe when I retire one day, I'll do more interesting work in microcaps because that's where it's kind of the true Wild West still exists. Yeah, so owner operator structures, strong rule of law, 200 million free float minimum. Um, I like to think that I'm going to be able to understand the businesses, so I'm not the type of investor who will spend 5 or minutes or half an hour looking at a report and just dismiss whether they can understand it or not. I'm willing to test the limits of my understanding. And that's actually what I enjoy most about my work. So I enjoy learning about lagging edge technologies, finance companies, um, kind of like the philosophy of finance, where it's just really difficult to kind of sink your teeth into, but once you're through it, it's just so satisfying and it opens more doors. So um, yeah, kind of agnostic with respect to complexity. I think it actually tends to produce attractive opportunities where less participants are willing to analyze such names because of the work involved. Um, and yeah, I mean, reasonable valuation. Most of my work is revolves around assessing the competitiveness of companies. Um, so I'm trying to really, really get into the weeds on what a company produces, where it produces it, what its competitors are producing, what is its competitive position with respect to disclosed market share. Because usually disclosures of market share are not representative of a company's true position, especially in kind of the small and mid cap space.
Absolutely. All right. So from there, once you have your main investable base,
Yeah.
now you're looking to dig a little deeper into maybe a few of those names given at any given time, or maybe a value catalyst just happened, or they just had let's just say a breakthrough quarter or something like that. What's your methodology from there for uncovering the layers and putting together a thesis? Do you talk to management? Love to hear the whole process.
Yeah. So I think usually the companies that I get most interested in present the most peculiar data. So to provide an example of Melexis, which is a company, Belgian company that I'm a shareholder of, um, they have the highest returns on equity of any named peer next to Texas Instruments, yet they generate revenue that is a tenth of their peer average. So how does that happen? That a company is so much smaller yet so much more profitable. And so those are the type of situations where it's kind of easy to develop a hypothesis where you might be like, okay, well, I'm pretty sure that they're focused on a couple niches within the market then, and they've optimized for those niches because how else are they so darn efficient relative to these much larger companies that should have economies of scale, et cetera, et cetera. So for something like that, I analyzed over 3,000 products to kind of determine exactly what Melexis is producing, what its competitors is producing. And sure enough, the company specializes in magnetic latch and switch and position sensors for the automotive industry. And they completely dominate that market, generally speaking, particularly with position sensors, latch and switch sensors. They certainly dominate on the more sophisticated end of that spectrum. And that was a very time-consuming process, but it's doing that work that allows an investor to acquire that understanding. And yeah, so it would be figuring out what products the company has and based on some kind of something weird, like it's just the company's more profitable, or maybe the balance sheet is just structured in a really atypical way. Um, there's some kind of weird aspect about it economically that makes that deeper work, that warrants that deeper work.
Interesting. So that's a great example on the one where it ended up being core. I'd love to hear on the other side where, I'm sure there's probably 10x more examples of this. But love to hear on the other side, and you don't have to name the company. I probably prefer you not to. But love to
Okay.
hear an example on the other side where you're like, okay, that's weird and interesting. Let me dive deeper, thinking that there might be something to it. But then after doing, you're like, oh, no, that was not what I thought it was going to be.
Oh, that's a good question. A lot of the time it works out. Um, Honestly, I actually can't think of an example. So far, I have a perfect I don't know what you would
Well,
call it.
maybe
Baseball.
it's a hold on, maybe it's a rethinking of this question because maybe it's not maybe it might ultimately. I'm sure you've come into situations where it wasn't necessarily one that like you invested in and ended up working out, but it also could be something like, well, that was interesting. Maybe it's not something I would invest in right now, but that was still really interesting to look into.
Right. Yeah, there are companies where their competitiveness might be very compelling after doing that research, but there's been some kind of capital allocation decision. Maybe they acquired a lot of new capacity in the late stages of a cycle, and now all of a sudden there's a lot more risk that kind of creates opacity um, around the maintenance of that competitiveness. And I think there are situations where that has occurred, and that often coincides with degradation in the balance sheet. So it makes those companies particularly exposed if there's a recession. Those are situations where I've identified companies that are very interesting, would love to own them, but there's been a fundamental change where I stopped doing the work. And that last year that happened in one particular case where I was researching the business for a month and then realized there's too much risk that I can't account for.
Let me say this. How much do you balance the amount of time that you put into maybe researching one idea and maybe ask the question like, okay, is there a reason why this is taking so long to develop the thesis versus, it's just clear cut, not to say you won't continue to do the work, but it's a lot more clear versus
Yeah.
one where it's just like, oh man, I'm putting a lot of time here. Like, is this worth continuing to dig further?
Yeah, I think that it should be relatively obvious within a week or two. And if it's not obvious, then I won't continue. So that might just be looking up all of the company's products and being like, wow, 75% of the products are like two products. And yet they have 13 products listed on their website, right? Like that's really that supports my hypothesis. So you need to find supporting evidence pretty early. Otherwise, it's time to give it up. That's how I approached it anyway.
Nice. No,
Yeah.
that's one of my favorite questions to ask because there's a lot of folks that be listening and sometimes might be overwhelmed, especially like in our microcap of like, how do I balance that actual, is this idea really that compelling? But I'm putting so much time into it that it's still not like, and being able to break away from like, man, I just put so much time into this. There must be a thesis. There must be something there that I'm missing versus
Yeah.
like, maybe it's the simplest answer is there's nothing there. And this other idea actually is really interesting and compelling. Happens a
Yeah.
lot in microcap because there's so many different possibilities.
Yeah. Yeah, I think that's just the way that it goes sometimes. I tend to be biased towards sort of capital cycle type investing, so I tend to be looking at companies that have periods where they over earn and under earn, and indeed, most of Warren Buffett's companies have these characteristics where these companies can increase prices some of the time, but not all of the time. And I tend to get quite interested in them when they are going through a cyclical downturn, because then there's less prying eyes, more time to do long form research. So that can kind of, yeah, but to your point, I would say that if you don't find confirming evidence relatively quickly, there might not be anything there. Like if I found a company where they had a minority share of the products produced, I would probably but I had this thesis that they were the dominant player, I would probably become uninterested.
You should
Yeah.
stick around in microcap more. You'll have plenty of time to research most of these because most of the time nobody's ever heard of them. So
Okay.
you have plenty of time to put together a thesis. If it's a couple weeks, like by all means, you will.
Right.
Um, Speaking to competitiveness, and looking at the competitiveness of various companies that you're doing deeper dive research, when I was doing my research on Maiden and your philosophy in the process, you have this framework called the testing market share framework. Can you describe a little bit of this and why it's so critical to your process?
Yes, so testing market share, very, very important. So that gets back to what I was talking about, where disclosures of market share are um, typically don't properly convey the true competitiveness of a company. So there are a number of ways to test companies' competitive positions. So I won't name the name, but there's a crane producer in Austria. They produce knuckle boom cranes, and they have 30% market share. And if you look at all of their products and you look at all of their competitors' products, you will find information that seems to contradict disclosures of company market share, where the company basically says that they have 30% market share, but if you actually look at the amount that their cranes are lifting, which is twice the amount of the next two competitors, you could thus conclude that they probably have, sure, 30% of the knuckle boom crane industry, but probably a majority share, almost certainly, in heavy duty knuckle boom cranes. And that is the type of information where I think is what makes testing market share worthwhile. So a lot of it is product analysis. So analyzing on a company's websites in their catalogs, what are they doing? Um, Sometimes it's platform analysis, analyzing the platforms of different companies to assess inventory of certain products. Um, Sometimes it's geospatial, so you're looking at the actual physical locations of stores and property and the use of that property for competitive, potentially, theoretically, because it's not disclosed, competitive purposes. So those are a few of the kind of big methods that I go into for that.
Absolutely. So as part of your process, at one, I guess two-parter. One, do you talk to management? And if so, like at what point in the process do you end up speaking with management?
Yeah, so I do speak with management after I have conducted a full analysis, because then I get to kind of really understand where color is needed. And it's also just nice because I'll send the report to management, and then it's kind of like I'm doing the work that they would pay, $40,000 for a consultant to do. They really love it, and then they're eager to talk to me, and it's a great way to kind of flesh out a report and also to prevent myself from being biased because I like a particular manager, or they have certain behavioral characteristics that I find compelling prior to doing the sort of deep quantitative research.
That is a really very good process. Has anybody not responded? Like you just put in these 300 hours worth of work, and you said to the management team thing like, oh, they'll really appreciate this at a minimum, and
Yeah,
complete ghosted.
only once.
Only once.
Yeah,
Was it a short
yeah,
report? No, I'm just kidding.
yeah. No, no, I don't write short reports.
No, I know, I'm just kidding. That actually would have been kind of funny though.
If I didn't like myself, maybe I would write short reports.
they have a place. It has a place. There's quite a few folks I know that are they do very good work, and it's important. Of course, everybody has their
Of
own.
course, absolutely. It's hard work though.
It is so hard.
Yeah, I don't want to go to court.
I give a lot of credit to the folks that are putting themselves out there and doing that.
Mhm.
It is I don't have the stomach to say the
Yeah,
least.
exactly.
I try and ask unbiased questions to management team and then publish those interviews as much as possible. But at the same
Yeah,
time, you're not trying to intentionally make anybody look stupid. Usually they'll do that themselves.
yeah, yeah,
Yeah. So I mean, a final question on obviously you run Maiden Financial, you
yeah.
publish your research. When how do you assess like, okay, this is a thesis I want to continue to flesh out, even though you've been doing a ton of work on it, versus like, okay, I think this is fully fleshed out, ready to go. I want to share this publicly, or at least to your subscribers.
Yeah, I mean, I think that there needs to either be valuation present that's favorable. So there's kind of a clear risk reward where there's the potential for asymmetric, an asymmetric return to be had at a very low level of risk. And my preferred setup is heads I make money, tails I make a lot of money. So I tend to be very conservative with um, I guess the valuation of companies. Um, yeah, I think valuation is a big component. The other component is if there's nothing immediately actionable, it's about doing preparatory work, identifying companies that may have very kind of clear competitive advantages that are not fully understood by the market at large. And that would be, those are the kind of two coins of that drives my work. So my most recent report was on a company that I don't think is actionable, but was just worth understanding. Because a lot of the times, Charlie Munger had 2 weeks to make a decision on Wells Fargo, and the great financial crisis. A lot of the time, you just don't have the time to do the due diligence necessary to make a decision when those crises happen. And so, as Charlie says, opportunity comes to the prepared mind. So yeah, it would be mostly valuation plus competitiveness or competitiveness by itself. That's typically what I favor. It just makes and as well having a strong balance sheet. Those two things make investing decisions a lot easier, especially if it is coupled with necessary demand, where there's a long-term necessary demand for the product or service that's being rendered.
100%. I mean, how do you balance also from just running, running the service, running this business where, maybe one of those opportunities comes up, you're like, all right, you know what? I'm going to put out a quick note or something
Yeah.
like that for, because it's something that is very actionable very quickly. Maybe you were taking a position, like how do you balance that? Like, okay, obviously, we got our long form, better have a
Yeah.
cup of coffee on Sunday morning, ready to
Yeah.
go reports versus our like, all right, it's Thursday morning, quick hitter. This crazy news is going down. Like, here's a quick hitter 2-pager of like why I'm finding this interesting right now.
Yeah, so if something is really compelling, we will just put out a very short form kind of initiation of coverage report where we're like, this is compelling. It'll be 2 to 5 pages, and then we will lead up with a longer form report at a later date. So that's typically how we approach that.
And just so we're perfectly clear, so that we have it on record, there's none of this is sponsor research or company sponsor research. It's all you.
Yeah,
Very cool.
and my intern and my contract analyst. Yeah,
Nice, very cool.
yeah,
So my favorite question to ask everybody on here, and this is very appropriate because you put so much time and effort from beginning in 2017 when you picked up one up on Wall Street to now running your own research firm, and with paid subscribers, the whole bit. What would you say was that aha moment in whether that was putting a thesis together or another investing experience, talking to me, whatever it was in your investing career thus far that you were like, okay, this is my framework that will work for me. This is how I want to do things. I'm a financial archaeologist. Let's go. I'm the Indiana Jones of financial markets. Like,
yeah.
how do we? You know what? I can't coin you as the Indiana Jones. Did that
That's fine.
somebody
I
else,
don't
but
care.
I'll have to think of another archaeologist. But you're the financial
Great.
archaeologist. For small micros. What was that aha moment?
Um, Focusing on how I best behave in the analytical and investment process. It was just completely introspective. So it was because I think that, there's no one way to invest, there's no one way to research. The best way to invest and the best ways to research is what jives best with your personality. And I'm just not someone that feels comfortable doing kind of surface level research or kind of even not even surface level, like you get medium depth and being like, okay, well, I can say with absolute conviction that I understand this company. And I said, for me, um, I want that absolute conviction. I want to know exactly what the company is because that's what I would do if I were an operator of these companies. I would want to know exactly the positioning of my company and exactly the positioning of my competitors because we exist in a very competitive market. And why would you not want to do that work? So I incorporate that in my research. And as a result, I behave better during market downturns. I am very good at disconnecting price volatility from business fundamentals. And I think those two things correlate very well with above average performance over time. So
Very
yeah.
good. When you're looking at, we're coming to the close here, but when you're looking at your investable universe, I mean, where have you been seeing the most opportunity, or where have you been spending most of your time and digging deeper into recently?
Yeah, so I feel so bad for my American subscribers because this year has been all Europe pretty much, aside from the last report that I published. Even the next report that I published is on a European company, and I'm so sorry for them just
I knew you
because,
were going to say you're literally on the pod. I
yeah.
feel like I've done like four European, like Europe is amazing right now podcasts and microcaps and stuff. So I'm not even surprised one bit.
Yeah, yeah. So that's where I've been finding the most value, but it's not because I think that America is ending or something like that. It's just that's where the best value is. And there are companies that produce products that are used all around the world, so we can get firsthand experience with them. And strong rule of law. Lots of owner operated structures. You have to be somewhat careful with them because sometimes they can be operated as a bit of a fiefdom. But Europe is kind of the place to be, and I've really been involved in sort of lagging edge tech and industrials in Europe specifically.
Very cool.
Yeah.
We've covered so much. I mean, I guess maybe my last question what was some of the biggest learning lessons that you took when you were at Tiny? I mean, you've
Okay.
spent so much of your career there.
Yeah.
Love to hear what some of the main things you took from that experience.
Gosh, well, I mean, I think the thing that I take most from working for Tiny and working for Folly Partners, Andrew's family office, is gratitude. He just left me alone, and it's kind of unusual to have such trust given to you within an organization. So I was kind of forced to develop the framework that I have for myself by kind of isolative introspection, if you will. Like I wasn't provided any mentorship. Charlie and Warren and Peter Lynch were my mentors. They guided me through. Um, but it's more just gratitude. I was given the environment that I needed to really get in touch with the work that I wanted to do and that I wanted to contribute to the industry. And yep, that's the big takeaway is and I feel like if I were to like with my intern, I just give them a framework and then leave them alone. Like I'm like, I just want you to just stumble in the dark on this and just acquire a complete and comprehensive understanding by yourself because I know you can do it and I don't want my own biases, muddying your research process. I want you to develop that self-sufficiency that I think owners should have um, to make decisions based on your own research and your own work, and of course in consultation with management. But after that work has been done, um,
I mean, that is some of the best advice possible. I mean, it's so important too, especially when you're weighing of, you know, it just gives you so much more freedom. If you're going to go off on your own, or if you're looking to, join a shop, join another pod, something like that. Like people just want to know that you're self-sufficient. You have your own
yeah,
brain. You have your own brain. You're
yeah,
not just, oh, I came out of this shop and this is how I now just think like this.
yeah.
No, it's you're adaptable and
Well,
understanding.
that well, that's not what scientists do, right? Like
Yep.
scientists are seldom like, well, this is like this universal approach. Like it's they're typically walking in without any expectation. They just have a method and a hypothesis and they just test and they don't really know what's going to happen necessarily. So I'm very, very cautious of developing universal frameworks in the sense that if I analyze one bank, I'm not going to use that same analytical framework for analyzing another bank. I'm just going to look at the bank and decide based on the information provided how best to analyze it. So it's like I don't want to be um, assuming that I know everything because I think that's a good way to I guess, to kind of stop growing. Yeah.
Very, very cool. Well,
So,
Gwen, this has been awesome. I think to close out here, this, what I end almost every interview on is,
mhm.
for folks that are listening in that are either just getting into investing or maybe, I know you're not specifically a microcap investor, but, your frameworks very much translate to microcap investing. What advice would you have for, someone that's either new to the space or really looking to just dive headfirst?
Oh, that's a really good question. I mean, well, I think. of course, you need to understand accounting, and that includes understanding how accounting can be manipulated, easily manipulated. So reading Howard Shillett, reading Martin Friedson and Fernando Alvarez, uh, John C. Tracy, basically the kind of books that really get into the weeds on how the income balance sheet and cash flow statements operate and the type of chicanery that can kind of mess with that. But I would say, honestly, I think taking an interest in learning for its own sake is a very underutilized pursuit in our industry, because what we want is we want results now, and we want results as fast as possible, and we want to get rich as fast as possible. And I think that we give up a lot of learning in that process. Just approach a company and commit yourself to becoming an expert on that company and an expert on that industry, and do it again and again and again and again. Because even if an opportunity may not be actionable today, doing that really deep work gives you a foundation to act with conviction when an opportunity does eventually arise, and it will eventually arise.
That is a phenomenal place to end it. So, Gwen, where can our audience go and find more information about you and Maiden Financial?
Yeah, so you can visit my website, www.maidenfinancial.io. Maybe there's a way to include my email in the show notes, but gwen@maidenfinancial.io is my email. LinkedIn is also another. You just look up Gwen Hofmeyr and you'll find me on LinkedIn. And that's it. Those are my avenues. Yeah.
Very cool. Well, Gwen, thank you so much for joining me today. Really do appreciate it. This was so awesome. I look forward to meeting you in person in Toronto, and yeah, look forward to the next update.
Amazing. Well, thank you for having me, and I look forward to meeting you as well.
Thank you.
Okay. Take care.